9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today, stocks across the Asia-Pacific extending the losses from overnight. Traders are bracing for key market catalysts, or waiting on. You have a U.S. jobs report that's coming out and also earnings out of Nvidia.
Senior Japanese and Chinese diplomats reportedly set to meet in Beijing as China threatens economic reprisals over Prime Minister Takaichi's comments on Taiwan.
And EV makers in focus with XPeng's revenue forecast falling short of estimates. Baidu is also on deck to report today amid concerns its AI investments are dragging on profits.
All right, could be a day of volatility certainly ahead. You take a look at how, it is coming down to Wednesday, right, which is Nvidia, and it really comes down to traders positioning and repositioning leading up to that. Because you talk about these recent sell-offs, there really isn't any kind of real trigger as to why things are selling off and why people are de-risking. But you have that, plus, of course, September jobs report comes out on Thursday. So I think plenty of event risk to deal with once again today.
Yeah, and it doesn't seem that we will have based on the current pricing, we'll have the Fed to come in and put a floor underneath the sentiment.
Yeah.
When you look at pricing right now around December, and I think we'll hear in a moment there from Mr. Waller talking about the case for a cut, but when you look at market expectations, it's more than the toin cost, in fact, on the opposite side of things. So apart from, I guess, the Nvidia story, which I guess we'll really just have to wait, not just what they say in reports, but really how they guide moving forward. We have earnings coming out of Baidu today. I'm curious to see what they're going to say also about that. And also the stock XPeng is going to take an absolute kicking today.
We saw the ADRs basically drop, right? Because it seems like right now this whole embodied artificial intelligence, this is kind of what the new buzzword is for this company. They're not just a pure EV play anymore. But people are starting to doubt whether they can actually break even next year.
I mean, it's the same thing with Baidu, right? We talk about that, and they're actually a tech company getting on AI, car company getting into AI.
What about Xiaomi, though? Right, became the market darling to what now? The worst stock on the Chinese tech.
Yeah, the worst performer in the Hang Seng Tech Index. A lot of things are unwinding. I think we'll show you the technicals in a moment, where you have the 50-day moving average getting taken out. But there's an interesting juxtaposition when you look at, say, MSCI China, which is doing quite well under the hood. But of course, suffice to say, we could maybe wait another day before we get that sort of floor in these markets, because as things stand, we are looking at quite substantial declines across these markets. But why don't we talk about the Fed first, and then I guess we can unpack
that was what UBS's Adrian Zurcher mentioned, right? If they're looking for further upside for global equities next year, it all depends on the Fed and whether they can actually continue this rate cutting cycle. And really, the question now for the market is all these sort of delayed data that we're going to get in the next few days or weeks, is that going to revive all these rate cut bets once again, right? You had the likes of Christopher Waller, Fed governor there, really reiterating his view that the case for a December cut. Here's more.
This reading of the data leads me at this moment to support a cut in the FOMC's policy rate at our next meeting on December 9 and 10 as a matter of risk management.
Yeah. As we look at markets and as the song goes, the September jobs report in mid-November is coming out, so we'll see.
We were talking about Baby Shark. That song.
What was the stock doing? North of 40%?
Yeah. Do.
Yeah, like a bad
Happy days.
A bad soundtrack, really. Bad soundtrack, really, is perhaps most apt when you look at the price action right now. Nikkei's off a further 2.5%. As we speak, so these are quite substantial. In fact, 2% of the Kospi index. TAIEX is coming online. In case you're curious, Ping Fong, of course, is the Baby Shark theme there. Quite the opposite there. We'll talk about it in a moment. U.S. two-year yields on the back of the repricing around the Fed. Bitcoin is, who would have thought, 90,000. We're closer to that level than we are to six figures. Overnight, we talked about XPeng, right? So XPeng was down 9-10%. The discount on the ADRs relative to where we are here in Hong Kong is among the steepest discounts we've seen in many, many months. So we'll see, and this is likely going to catch down quite substantially going into the open today. Xiaomi, we talked about this. Trip.com did see a further downdraft overnight. This was down to, I think, largely the Japan and China story, which we'll get to in a moment with Min Min. Baba going the opposite way, almost reversing all the losses from Friday, I believe, at these levels. Very quickly, A50 futures, and in case you missed that, the big macro news as far as China goes is the Eurobond I think 4 billion euros that they are starting to marketing based on our sourcing right now. So we'll talk about that in a moment. 1.8% is your Chinese 10-year yield.
Yep, let's get more on what's going to dominate trading here today and get to our managing editor for Asia Equities, Lian Ting Tu. She's here in Hong Kong, back in Hong Kong for us. What's going to be the biggest theme today?
I think it's basically a gigantic profit-taking sort of theme that's playing out today and potentially tomorrow. Basically, this whole week, because of Nvidia earnings, investors are taking it as, profit-taking, right? You're saying just now, Bitcoin, gold, tech stocks all down this week. And you see even within the space, people are doing rotation. They're going into dividend-paying stocks. Today, MXAP, the best performing sector is utilities. And that's, dividend payers, right? And if you look within AI, we just wrote about how, chip stocks are getting sold, but people moving to energy storage, people moving to, aluminum, the metal, that's a big supplier for all the data centers. So a big rotation playing out. And in Japan, we're seeing value stocks, these, sort of earnings yield, stocks with high earnings yield are getting bought. So altogether, that's the story right now.
Yeah, it seems like a tilt towards the defensive, I think, predictable income strategies. Might a good Nvidia print cause a rotation back into the sort of growth momentum in AI plays?
I think it's probably going to be short-lived because there is a lot of uncertainties out there. As you guys talking about Fed, that's the biggest thing, right? Nvidia, yes, it's a big event, but people immediately look ahead to the Fed decisions, right? And also all these eco data from the U.S. that's been delayed. Yeah. We don't know how the picture will be. So altogether, I think, although December, historically speaking, is a positive month, overall, I think this December may be a bit cautious.
You mentioned about the fall in crypto. I mean, it seems like it's almost like a free fall now. Yeah. Is that more something that is like the canary in the coal mine of broader asset classes now?
And risk, the risk proxy.
Yeah, or is there something more
else.
Structural going on there in Bitcoin itself?
Yeah, I think overall it's all linked.
Yeah.
Bitcoin, NASDAQ, I think a lot of investors are overlapping in these two asset classes. And Bitcoin, I think because liquidity is relatively thin relative to tech stocks, we're seeing bigger sort of gap downs. Yes, I would say right now it's just across risk-off mood, but Bitcoin we see higher beta, bigger moves.
Lian Ting, fantastic. Thank you so much. Nice to see you in town, by the way. Lian Ting Tu, our managing editor there for Asian Equities. What a time to be here to tell us the market story right now. We're looking at this sell-off right now. We're about an hour and 7 minutes to the cash market session in Japan. Nikkei 225 is off substantially, 2.5%. Nearly 200 stocks in the Nikkei are actually down. So in terms of market breadth, this one is actually quite substantial. Going into the session today. Japanese media, let's get the latest here, reporting that senior diplomats from China and Japan are planning to meet in Beijing today as this dispute over the Japanese Prime Minister's comments on Taiwan continues to simmer and play out in these markets, as we've seen already. We did hear from the Foreign Ministry in China on Monday.
Regardless of which party or individual governs Japan, it must adhere to and honor the Japanese government's commitment on the Taiwan question. We urge Japan to act responsibly toward history and bilateral relations, stop crossing lines and playing with fire, retract its erroneous words and actions, and genuinely implement its commitments to China through concrete actions.
Let's bring in Min Lo, our China correspondent, just help us understand this meeting that's taking place and what do we know so far ahead of it, or have there been discussions ahead of that meeting?
Yeah, well, things are certainly heating up. We did see the Japanese embassy, for example, issuing a safety advisory for its citizens in China, asking them to be careful when they're outdoors, asking them to avoid large crowds, and to take care of their children. It seems like there is concern that maybe protests could be breaking out. And yes, the top Japanese official had traveled to Beijing yesterday. We asked the foreign ministry about that, but she didn't have any information to offer. But today they're going to be meeting, according to Japanese media. We'll see what happens. But we know that the spokesperson that you heard earlier, she repeated again the demand for Japan to retract those statements. But analysts are saying that, we know that Takahashi hasn't done that so far and that her hands might be tied because she was elected as this nationalist leader, right, in Japan. And some are saying that retracting the comments would be seen as bowing to China, and that could have political blowback in Japan. So a lot depends on whether China tighten the screws further, because we had that warning on a state-linked social media post saying that China could cut military, diplomatic, and economic ties with Japan. Now, of course, we're not at that stage yet, but we are seeing a slew of media commentary really putting out very sharp rhetoric, and we have Global Times reporting that some film distributors in China is starting to delay the screening of some Japanese films, citing the decline in box office numbers and cooling audience sentiment.
Yeah, we're just hearing from the Defense Minister Shinjiro Koizumi speaking there, as you mentioned about that comment, that Takaichi remarks on November 7 do not change the government's stance. What sort of options are there now to end this sort of retaliation from China? I mean, it seems like the Japanese are really trying to at least cool things down.
Yeah, but the thing is, you know, when they say that their stance has not changed, China doesn't see it as such. And in fact, People's Daily put out an editorial saying that this is a clear strategic shift in Japan's stance, because they are shifting away from strategic ambiguity. Because Takaichi is probably the first prime minister to actually explicitly say that an attack on Taiwan could be an existential crisis for Japan, which gives them the legal justification to lean in militarily. And it's not just what she said, right? The People's Daily cited, how Takaichi is increasing the pace of this rise in its defense spending to 2% of GDP. She wants to bring that forward and achieve that by early 2026, and how she is, leaning closer towards the U.S. and loosening restrictions on arms exports, for example. All of these pointing to how Japan is looking at expanding military aggression as they did before and repeating the follies from World War II. And you can see this quote here saying that militarism from Japan has often used existential crisis as a pretext for external aggression.
Oh, okay. Some pointed language, which isn't really too surprising given the context that you just laid out. Min Min, thank you so much. Min Min Lo with the latest there on this developing story, we should note, as we look ahead to that as well. Just to mention, we talked about Xiaopeng, Xpeng at the top of the show, so we were down to 10.5%, give or take, ADRs overnight. We're now called below 90 Hong Kong dollars going into the open today, so that should be the first time we're trading below that, if that is the pre-market indication. Give or take, since the start of this month, which as a milestone is the first time we'll be trading below the 95 level since AI Day on Xpeng.
I mean, it's been more than doubled, right, the stock overall this year. So certainly there is maybe some signs of profit taking once again. I mean, the third quarter loss narrowed. That was actually a beat. It was really the revenue guidance for the fourth quarter that really raised a lot of question marks on whether they can actually be profitable this year. Certainly, this whole kind of future of mobility, that's the one thing that we've been kind of tracking as well. And obviously, it's going to take some time, I guess, for traders and investors to kind of look at this company as not just an EV pure play now, but really one more that is almost like a AI conglomerate in some ways.
I mean, arguably, if we did not have that AI component drive the price up 20% last week, we'd be, all things equal, the same thing right now. And we'd be looking at these earnings through the prism of a car company and not so much an AI play. But I guess we have the perfect guest to tell us about this and really how we should be valuing this specific stock. Tina Hou out of Goldman Sachs, covers autos, of course, will be joining us in a couple of minutes to unpack those earnings. Leap Motor also came out. Also, Geely came out as well. Counting down to the open of trade, 16 minutes away in Shanghai, in Shenzhen, and here in Hong Kong. You're watching The China Show. Good morning.
Here's your agenda here today. Of course, watching CNY and really the 710 level certainly has been something that we've been watching and close to that as well. China-Japan tensions, we've talked about, the diplomats are meeting and really trying to maybe find some cooling of these recent flare-ups. But the rhetoric from China of late has been still quite strong. Sectors include gold, crypto, PCs, right? Lenovo, of course, reports later on this week. But we talk about Xiaomi. That's going to be the big one to watch there. Baidu as well. Leap Motor, Xpeng, and Trip. Those are some stocks to watch here. Some earnings coming out from the two car automakers as well there today.
Yeah, and, we're curious to see how Xpeng is going to, we know how Xpeng is going to trade in a couple of minutes. Where we go on day two is really up to the market to decide. Massive move down in the stock, of course. This is over 2 days. These are the ADRs, and a 10.3% drop overnight is really indicative of how we'll trade in a couple of minutes. The pre-market. Let's bring in Tina Hou, out of Shanghai, the China autos analyst at Goldman Sachs. Tina, good morning, and thanks for coming on the show. What do you make of the earnings?
Good morning. Yeah, so we're in the middle of the third quarter earnings season right now. Majority of the companies have reported. I think across the board, we are seeing majority of the coverage missing expectations. Some of them just straight out from the top line revenue side because they are losing market share or facing a lot of pricing pressure. Some of them, even they're gaining market share and have pretty good volume growth. They're still missing on the operating profit side or on the net profit side. And then there are others that are maybe in line with expectation in 3Q. However, their guidance for 4Q is below expectation. So I would say we do see across the board, there has been quite a lot of pressure going into the third quarter. And then we foresee that going into the next quarter, the December quarter of the year. So a lot of pressure on the pricing side, as well as on the volume growth, industry beta slowing down into October and likely into November, December months.
You seem to be painting a pretty, I guess, dire picture of what's to come, right? When I look at things like, subsidies that are going to be phased out in the fourth quarter, when you talk about, these price wars, which I don't know, have you seen any sort of sign of anti-involution helping, at least arresting the declines that we've been seeing across prices?
What we're seeing, speaking of anti-involution, is very interesting. What we're seeing is, on the one hand, you have the relatively better price control or stability of the existing models on the market. So we are observing, if we're talking about the dealer discount, I think from our data tracking over 200 EV and ICE models in the market, starting from June and July into the second half, the dealer discount have narrowed and also have been stabilized. On the other hand, we continue to see very aggressive pricing when the companies launch new models or launch facelift models with spec differentiation or spec upgrade. So I think that is what is leading to the OEM companies and as well as suppliers margin pressure and then operating profit pressure in the market. And also what we've observed is actually the industry consolidation or is getting actually more and more fragmented. If we look at the HHI index of the NEV volume market share, it's going lower and lower month after month this year.
So, Tina, from the perspective of let's put it very simply, from the perspective of a buyer, it really doesn't matter if it's a subsidy or if they're cutting prices. If the subsidies go, do you think that incentivizes OEMs to even further price their models more aggressively?
Right. I would agree with you. If we look at what the OEMs are doing now, what they're saying is if you place your orders this year now, and if you cannot get it delivered by the end of this year, then they will pretty much subsidize the extra EV purchase tax, which is going to be 5% next year versus 0% this year. So they are trying to, I think, still lock in customers. And next year, from our conversation with a number of the OEM companies, some of them still have quite aggressive volume target, but others, I think they are also more conservative and hesitant to really give a very clear volume guidance because they are obviously also seeing the demand picture being relatively uncertain and maybe facing some headwind into next year.
Tina, we're seeing XPeng shares in the pre-market plunging some 7% here right now. I got to get your take on the whole industry. It seems to be evolving, right? You have, of course, still those EV pure plays. Are those still the preferred ones to watch in terms of still delivering growth? Or do I have to look at something like an embodied AI ecosystem now, like an XPeng, and how they actually deploy AI? Is that more of a more interesting part of the industry now to look at?
Right. I think obviously the industry is developing and evolving very fast. I think if we break it down into two parts, one is the more like traditional piecemeal, the auto business. The other, obviously, some of these companies are evolving into other robotics, robotaxi, humanoid robot, eVTOL, these new revenue streams and new potential market. So for the next, let's say, 3 to 5 years, your core revenue and earnings are still be coming from the auto side of things. And for autos, we think next year likely the domestic market and the overseas market is going to trend quite differently. On the one hand, we see demand pressure in the volume in the domestic market with uncertainty in terms of the continuation of trading subsidy. And even if the subsidy continues, what's going to be the effectiveness? It may start to decline the effectiveness. On the other hand, on the export side of things, we've seen it's actually beating our expectation this year, especially the EV export. And in the overseas market, we actually see that market is actually pretty much ripe for mass market adoption and acceleration into the next 3 years. So it's going to be very different depending on your exposure, your footprint in the overseas market, and how aggressive you launch new models and expand your market share there.
Yeah, okay, so let's use BYD, because people talk about BYD as the proxy for, the Chinese car maker that is making waves overseas, let's put it that way. How many cars do you think BYD can sell this year? And the reason I ask you that is they've had to revise their forecast for this year, mid-year lower. And I wonder what degree of confidence we can attach to forecasts going into next year. And how important is the overseas market for a company like BYD?
Right. I think maybe not specifically talking about any specific company, but I think for domestic market, obviously very dynamic market share changes this year between different players, and as I just mentioned, the overall consolidation level is actually going down. Next year, I think the company have some volume guidance currently for overseas, but they've not been giving guidance for the domestic market. So I think that also reflects the relative confidence level and then the certainty for them in the different markets, in the different markets. And then,
we got to leave it there, but thank you so much. Tina Hou, China autos analyst at Goldman Sachs there. As we talk about XPeng seeing quite a bit of outside moves to the downside. We're down 7% here right now. Plenty more to come. This is Bloomberg.
Right, welcome back. You're watching the China Show. 40 seconds to the opening bell. A50 futures down a third, almost down 1% on the Hang Seng Index. If you think this is bad, look at Japan, and you'll feel a lot better about these markets right now. Just to say, it is a down arrow story just about across the board today.
Yeah, it is. Yesterday was about the Japan and China tension. Certainly that could play out for another day. But SoftBank, we talked about, that's one of the bigger drags.
That's the other one, too.
Given this kind of AI unwind once again, you pair that with uncertainty around Fed. You hear Waller saying, still he thinks there is a case to cut in December, but that really isn't the case within the FOMC. That division is enough to kind of continue to add more uncertainty about where the Fed's going to go in December, right? As we count down to the September jobs report that's going to be happening on Thursday. Before that, of course, it's Nvidia earnings, and who knows what's going to happen in that. I think options are talking about a 6.5% move in either direction.
Yeah, the swing.
Given how these results are going to fare out. So here you go. This is what the onshore markets are looking like. CSI 300, we are seeing some moderate declines across the board, 0.25% to the downside for Shanghai, as well as Shenzhen down about a third. We're watching the likes, of course, still the tech plays here. Still catching a decent bit when it comes to CATL. Capricorn has flipped in the negative there, but certainly watching very closely, just given what we've been seeing in the whole AI trade, right? When you talk about now the earnings side of things, like the likes of XPeng, that is possibly going to be dragging down HS Tech here today. They are kind of switching to become from this EV pure play into this sort of embodied artificial intelligence ecosystem that they've basically self-developed, right? So there's a lot of questions on, out of the whole whole Chinese tech space or EV space, who has the most ability to really deploy this AI and kind of mimic the success of Tesla, right? Take a look when it comes to Hong Kong, though. This is what the board's looking like here today. So tech's very much in focus. We mentioned about the cratering of Bitcoin and really crypto overall. Is that sort of the canary in the mine here across risk assets here right now? They certainly are bearing the brunt of the sell-off here. And there you go. You're seeing Tencent, Baidu, Meituan, Xiaomi all down by about 1%. Alibaba's doing another story here, actually recovering, of course, after that FT report. So certainly that is helping in terms of Alibaba, but they're bucking the trend. 1.2% to the downside for HS Tech here today. We still have earnings coming through from the likes of Xiaomi. We're watching Baidu as well. Obviously, when it comes to the monetization of AI, Baidu, that's the big question there. Xiaomi as well. A lot of headwinds when it comes to not just the smartphone side of things, but also the EV side of things as well. We'll get to Tina Hou about that in just a bit. Crypto is doing this, right? So we talked about, this wiping out 2025 gains here. We're now around 91,000. You take a look at the options markets, you're seeing downside protection building up around 90,000, even 85,000. So is it going to be a free fall to those levels here? And really, it's just a double whammy, right? But there's no trigger, once again, Dave. But it really has been the talk about AI, unwind, lofty valuations, Fed uncertainty. That leads to sort of the macro assets are selling off here. There's also the structural side of things, what Michael Saylor is doing. We didn't even talk about digital asset treasuries, right? And this whole kind of Bitcoin hoarding. It's quite interesting what's going on there as well. But there you go. Crypto stocks are falling. Take a look when it comes to earnings, right? So Trip was a beat. Zhejiang Leapmotor, Xpeng. There you go. Xpeng's down some 8%. So we are coming off some of the stock, which has basically more than doubled this year so far. But it was the fourth quarter guidance when it came to revenue that did miss estimates here. Obviously, a lot of talk whether it can break even is still a big question mark.
Yeah, I think we've been asking that question to Brian Gu every time he's on the show, and it seems to getting pushed back. But I mean, they are getting closer when you look at the narrowing, I guess, of the loss, right? So at $89, we're back to levels of about the start of this month. Just goes to show how much the stock has actually rallied in the last 2 or 3 weeks or so. Speaking of one that's gone just about roundabout is Xiaomi. Coming up on your screens, went from Xiaomi the money to Xiaomi the exit here. It's gone from market darling to the worst performing tech stock in China in just a few months. It faces headwinds, smartphone, EV markets. Tina Hou did a fantastic piece on the stock today with us here on sets and what investors, Jeannie, are expecting from the company's results.
Yeah, when we talk to investors, I think there are two key things they're looking at as kind of the major headwinds the thing Xiaomi is facing. So one is the hurdles in EV. So on the one side, they are having the difficulty expanding their Beijing factory, the phase 2 factory that failed to obtain the government approval in October. So this is one overhang for in terms of the EV capacity, which they may not be able to deliver the cars fast enough. The second thing is more broader, like the government is kind of like phasing out the subsidy, the trading subsidy, in terms in the auto market. So which kind of would affect the demand. The third thing, the other part is more about the smartphone. All the AI things, they have actually filled a super cycle for the memory chips prices. So we have seen, according to some data provider, memory chip prices actually surged more than 20% in October alone. And then according to some industry experts' estimates, that's going to rise another 10%. And then the rally is going to continue, according to JPMorgan. So all this means the component cost for smartphones, Xiaomi produce is gonna, having a lot of margin pressure because it's very difficult for them to pass on those kind of rising component costs all to the consumer. If you consider consumption downturn in China, and also, the iPhone 11 is selling really well in China. So all the competitions make it really hard for Xiaomi to hike the prices. They've done some, I think they've trying to, lift the prices for some of their flagship products recently, but it's just to investors, there's a big question mark, where can they support their margin going forward?
Yeah, I mean, it seems like it's hard to see any sort of comeback for Xiaomi. What are the analysts saying here right now? It seems like, in terms of short sellers, we're seeing more of them circling around this stock here right now, and the price target continues to be slashed.
Yeah, I feel like Wall Street is already responding to some of those worries. So if you see, like just last week, we've seen JPMorgan. They've been holding overweight on the stock for more than a year, and then they downgraded that stock because of the margin pressure we just mentioned in the smartphone sector. And then also, I think also last week HSBC slashed the Xiaomi's target price by more than 10%. So I think people are getting more and more bearish, kind of like considering, this is a super cycle for memory chips, so which is increasingly like a pressure for the device makers.
Yeah, I think HSBC still said that prices can still rise 10% there when it comes to DRAM. Jeannie Yu, thank you so much, our Bloomberg Asia stocks reporter on what to expect out of Xiaomi a little bit later on. Let's bring our next guest. Joanna Shen is EMAP Equities Investment Specialist at JPMorgan Asset Management. So emerging market Asia Pac, obviously, is EMAP. A lot of concerns about this whole AI bubble that is forming. Do you think that we're going to see a bubble that could be burst anytime soon, or are we starting to see signs of that?
Well, I think if we take one step back, the AI capex actually is quite strong this year. So early this year, the AI capex is 350 billion, and next year it's also trending up to 450 billion. So the key thing here is not whether there's a bubble, but it's a matter of when or if the bubble will burst. If I use the analogy of a beer, so the foam on the top is often the most delicious bits, but it's not going to last forever. I think there's a lot of observers sort of drawing the comparison between this AI build-out vis-a-vis the dot-com bubble era. Yeah. But I would say there are a few key distinctions. Number one is the source of funding. So in the dot-com era, so the so-called vendor financing loop, yes. That's actually is amplifier for the bubble. What happened is basically the telecom companies, they were lending to their customers, who in turn used the proceeds to purchase more of their products, which sort of inflated the demand. And the funding back then is largely by equity or fixed income sort of issuance from companies that is unprofitable with unproven business model. But in this AI build-out, the AI capex, the cash flow, is largely funded by the large U.S. Technology companies with strong balance sheet and experienced management. They are not short of cash in a way. Admittedly, we do see some tech companies tap into the debt market globally. 1.2 trillion corporate debt actually is related to AI infrastructure. Right. But when the CSP or the hyperscalers, they tap into debt market, typically it's a matter of diversifying their funding source or taking advantage of the lower borrowing cost. It's not a matter of they are desperate for capital. I think historically, if you look at when the bubble bursts, it's typically when the credit condition tighten. So this time around, the leverage is quite minimal, which is a key difference from the last cycle, which means this cycle is less vulnerable if there's a funding squeeze. And second thing, very important, is on the demand side. So if you look at the dot-com era in 2002, the fiber cable capacity utilization was only 7%, and it took years for to digest this oversupply. But right now, if you look at AI data center, they are running at full capacity. Vacancy rate is really low.
So if part of, I think what you're saying is we're looking in the wrong place to determine whether this is a bubble or not. Even if it's a bubble, as long as
we'll be in the midst of a bubble.
We don't know until it bursts.
Yes.
Until the beer is there, until the froth is still available to sip on. But that's important. The other note that you mentioned, credit conditions will keep bubbles from bursting. What then is the best leading indicator of risk assets going into next year?
So for us, I think if you look at earnings visibility for the next couple of years, it's still pretty good. However, the sustainability of this long-term spending pattern, which in turn will lead to the growth rate and margin profile, I think it's quite uncertain in the long run. So I think that's one area I think investors should be contextually alert to what's happening in AI. And also, second thing I think to highlight is to quote Jensen Huang, the ultimate bottleneck of AI is power. So if you look at the power usage in the US, it accounts for about 2% to 3% this year. but it's projected to grow to 6 to 12% by 2030. And globally, the number will go up from 1.5% to 4% by the end of the decade. So how to solve this power bottleneck is a critical question facing the AI industry.
So in terms of the AI themes in Asia, where are you most upbeat? Do I look at China? Do I look at Hong Kong? Do I look at Taiwan, Korea? I mean, or even Japan? What are the best kind of geographies now?
I think investors should take a global view, holistically look at the AI ecosystem, because if you look at the US, they're very strong in AI chip design. But here in the North Asia, it's a fertile ground for the picks and shuffles names. We don't really care if it's Nvidia or AMD or it's Google GPT. They're getting more market share, winning the arms race of AI, because we have the foundry makers, we have the cooling systems, we have the testing providers, semi-equipment names, or the wafer producers. So they are the picks and shuffles for this AI transformation. So it doesn't really matter. And also, interestingly, if you look at valuation, Asia tech names are trading at a wide discount compared to their US counterpart. Right. Take the Korean memory chip name, for example. That name has 65% market share in HBM. It's trading at 3 times of price to book with an ROE of 40%. And its US counterpart is trading at 4 times price to book with an ROE inferior 30%. So I think that paints a picture for Asian tech supply chains.
I mean, even a name like TSMC is trading widely more expensive in the US than the same TSMC
in Taiwan.
In Taiwan, right? To your point. So, like a market like Korea, since you brought it up, right? That market was traditionally one name, right? And now it's spread to other, arguably tech names. So, is that an index play next year, Korea? Do I just buy a Kospi product? Because that seems to be a really good AI play when you look at how that's the index constituency at this point.
Sure. I think if you look at the index, actually Korea has evolved. So 30 to 40% of the index actually is AI related, memory names, power name. On top of that, there's also this friendshoring or onshoring beneficiaries in the areas like shipbuilding, battery, or autos. And also on top of that, there's this value up sort of beneficiaries, as we have seen in financials, for example. So to answer your questions, we still think Korea offers a diverse opportunity for active management. So looking ahead, I think the key thing next year is to see how the value up program will further evolve. So if we did some analysis, if Korea were to utilize their balance sheet more efficiently by disposing non-core assets or doing more sort of cash reserve buyback, then the ROE can be unlocked from the 6% at the current level to 12%. Arguably, this is the path Japan has taken, which takes Japan 10 years. I'm not saying it will take Korea next year or the year after to get there, but the direction of travel, nonetheless, is positive.
So given this sort of de-risking that we're seeing across markets now as we count down to the end of the year, I mean, what are you most positive about next year? And what are some of the risks on your radar? And what can maybe derail this AI trade?
Yeah, I think in terms of the positivity, at least from the Asia perspective, I think still the AI secular trend is very strong. I mentioned the visibility for this year or next year is still quite good, which arguably should bode well for the Asia supply chain names. On the risk side, I think first foremost, if US slow down, it's not a good backdrop. And second, the geopolitical tension. But to be honest, it's nothing new. It's the permanent backdrop we have to work with. And number 3, I think in the region, in terms of India, it hasn't sort of rallied or recovered to the level we would like it to be because of different reasons like trade policy, tariff, lack of AI beneficiaries. But nonetheless, the domestic funding is providing quite strong support. If we see more capex, especially in the private sector, the market could continue to do well. So a lot to watch for 2026.
Yeah, it sounds like you're bullish. Okay. Joanna, thank you so much. Cheers.
Thank you.
Joanna Shen there, EMAP, Equities Investment Specialist at JPMorgan Asset Management. We will leave you to look at markets, how they're doing at the moment. We're coming off lows, although as you can see, we're still doing quite badly across the cash markets. We're down over 1% on the major Asian benchmarks. This is the China Show.
In some corporate news this morning, Rio Tinto is adding new surcharges on aluminum headed to the U.S. as tariffs tighten supplies and inventories drop. The extra fees stack on top of the already high Midwest premium, pushing costs to more than 70% above the raw metal price. The U.S. aluminum market is now described as, quote, all but broken, with buyers forced to pay up as Trump's 50% tariff drives stockpiles to record lows. UBS Chairman Colm Keller has held talks with U.S. Treasury Secretary Scott Bessent about potentially moving the bank's headquarters to the U.S. The discussions come amid uncertainty over Switzerland's proposed capital reforms, which could raise UBS's requirements by roughly $26 billion. The Trump administration is said to be receptive, even as UBS continues lobbying to ease the Swiss rules. Peter Thiel's hedge fund exited Nvidia in the third quarter, selling 537,000 shares, a stake worth around $100 million as of this quarter's close. Now, Thiel Macro shifted its biggest positions to Apple, Microsoft, and a smaller Tesla bet. The move came as filings show hedge funds nearly evenly split between adding and cutting Nvidia exposure.
Okay, let's have a look at shares of New World. We're down about 1.6. We're trading at 750 a pop here. The company says it expects to cut a portion of its debts after an early deadline to accept this plan to swap out some of its bonds here. Let's bring in Trista Shinyu-Law, of course, our China credit reporter, that was quite Greek there, to help us explain what that means in simple English. What was that I just read?
So New World right now managed to cut about $1 billion perpetual bonds and also around 30 million senior notes while this debt swap plan. And it's achieved about 63% of its target on the perp front. And right now the developer also extend the early bird deadline to until December 2nd. So anyone who joined the plan before December 2nd get the same treatment. So I think investors are still processing the plan right now. And the latest plan is New World's latest effort in trying to cut its debt low.
Okay. Tell us why this is important then, for New World.
So we still remember that earlier this year, New World managed to seal the mega refinancing deal, trying to avert a debt crisis. Yes. And right now, it's their latest effort in trying to, stabilize its finance further. Because even after the mega refinancing, it's still far out of the woods yet. So the latest thing is they are turning bondholder for their help to trying to get through this crisis so far.
Based on the people that you talk to, what's next for New World? And clearly there's a sense that New World has pulled back from the edge. Have things stabilized is the question.
Yeah, so next thing people are watching is definitely, how New World will deal with its remaining bonds, right? Because even under the full participation of this plan, there's still some remaining bonds there. How are they going to deal with it? And whether there will be an equity injunction plan coming in, or whether they will roll out another round of liability management plan.
All right, Trista, thank you. Trista Luo there, our China credit reporter, on the latest when it comes to New World. Of course, you can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter. That's out every Thursday. Check out some cool stories. Even David writes on it every week now, right?
Yeah, when I feel like it.
Yeah, he writes some interesting stuff. Things that you might not see in the terminal, actually, I think are featured here as well. So feel free to check it out. Restaurant reviews and the like. Bloomberg.com/newsletters.
This is really a good representation of what's happening across different major themes across the greater Chinese markets. You have a fundraising that's a Hongqiao story, 5.3%. They're raising quite a bit of money in the debt market, effectively for debt repayment, to just lay it out clearly. Lenovo is a hardware PC story following the news flow and the guidance coming out overnight and its peers in the U.S. So that's as it's playing out across the stock. Xpeng is an earnings story. It's an AI story all in one. It's a repricing of the AI story to the downside, which is really what we've seen the last few days or so. We're down 8.5% on an EV maker that's now, of course, an AI play.
I think with Lenovo, it's interesting. We were talking to Jeannie with Xiaomi about this whole memory chip super cycle, right? That prices are still going to be encroaching on margins particularly when it comes to companies like Xiaomi. I think Lenovo is certainly not immune to that, right? You take a look at, the pressure on margins, higher input costs. That's why Morgan Stanley downgraded that stock now of Lenovo, and that's probably why we're seeing those moves when it comes to that stock. Keep in mind they come out with earnings as well.
Yes.
Keep in mind, we're going to be in Singapore. We're heading off after the shows, Dave. We're going to be there from Wednesday to Friday for, of course, the New Economy Forum.
Yes.
Your first time. What are you excited about?
I'm going to Singapore, so I'm taking Yvonne to La Paz. She's good enough.
We're looking forward to it. I'm going to say yes to that date.
Thank you so much. I haven't even asked, but there we go. Okay, on air.
I knew it.
That's our first stop. Apart from that, we'll see if some of our guests and some of the big names coming and attending the New Economy Forum will be open to maybe a stop at a hawker stand. There we go. Everyone from George Little-Heddery, of course, out of HSBC, and a lot of the big names. This is a partial list of the very big names coming through, of course, over the next few days. We'll be taking the show on the road from tomorrow throughout the course of the Bloomberg TV programming. So stay tuned for a lot on the way, including here on the China Show. The second hour is on the way.
Welcome back to the China Show. Here's a look at the HSI half hour into the session. And yeah, you're seeing here some downside, about 1% or so. It's sort of mirroring what we're seeing across really the Asia Pacific here this morning as we start to see, this fourth day where this global sell-off is extending into and really investors shifting away from riskier assets. We talked about with our team of the Anting 2 from the Asia stocks team about this whole kind of rotation into value, right? Utilities, for example, is one of those key sectors that are doing quite well here today. Of course, that's ahead of the Nvidia job, and of course that jobs report, Nvidia results, I should say. But here's how the rest of the markets are doing, right? You take a look at how Japan, Korea, Taiwan are actually doing, relatively speaking, worse than Hong Kong right now. Nikkei 225 is down about 870 points. Kospi is also lower by 2%. The likes of SoftBank's really dragging out Japan. We're watching some of the chip plays as well. But certainly what you're watching when it comes to U.S. futures, at least those are in the green, right? So U.S. and Euro futures looking like this here right now, perhaps a little bit more stability as we wake up to Wall Street there on really after that sell-off that we saw overnight, because we'll talk to David about these sort of technicals that we're seeing in the S&P, for example, which haven't been good, right? Breadth has not been pretty, as some analysts have said. And as we kind of wait for, of course, a certainty around the Fed, right? Chris Waller, of course, defending his call that he thinks that there should be a December rate cut. He says jobs market is at stall speed, but there's still a lot of division among the FOMC about where the inflation outlook's going to be, and really those Fed odds are still sub 50% that they're going to cut next month. So there you go. We have to wait for this week for things to settle, really. But in terms of the bigger movers, we talked about that rotation, right? So it's utilities, it's healthcare that's actually catching a bit here this morning. You're seeing that play out in some of these sort of stocks we're talking about. James Hardie, Unimicron, those are some of the ones that we're watching very closely here, the big top movers in Asia. On the flip side of it, it's Xpeng that's on the opposite side of the spectrum. We're down close to 9%. Barclays had a pretty interesting note, right, on the back of those earnings, where revenue guidance for the fourth quarter was a miss. They said, look, there's all this hype around robo-taxis, about humanoid robots. That's going to fade if you don't see this to translating into some sort of earnings growth for next year. So that certainly is still the big question mark for Xpeng here, Dave. But yeah, you talked about the technicals, right? I mean, that 50-day moving average, we've held above that for the U.S. side of things, for 138 days or sessions? And we finally kind of breached that yesterday, right?
Yeah, we closed below that level, and I think there's a fantastic piece. A shout out to our colleagues at Bloomberg News, of course. We're coming up with the sort of charticle on the ugly technicals in the S&P. And what we've done here is we've taken that and we've juxtaposed the China story to that, just to show you where things are similar and where things start to diverge between sort of the China-U.S. side of things. And we'll get to all of that, right? So Yvonne talked about earnings, and that's really yet to show up, and I'll get to you a chart later on earnings and really juxtapose those two things. But yeah, on technicals itself, both the S&P and MSCI China, as you can see, are below your 50-day moving average. Right. Now, on market breadth, something that Yvonne was just mentioning there, the next chart's going to show you this. The percentage of the benchmarks, we're using the NASDAQ in this case, and we're using the Hang Seng Tech Index in this other case to show you that the percentage of the NASDAQ that's now, let's change the chart, please, if we can. The second one, thank you. is now moving to about 10%. That's the blue line you see. Hang Seng Tech, 0%. 0%. So while we are off highs on the benchmark itself, in terms of market breadth, none of the stocks currently, that could change, of course, are at 52-week lows. And the NASDAQ index, you'll need more than mouthwash to address the bad breath, if you get the joke. Okay, vol, this is interesting, right? We've talked about the pickup in the VIX index. You look at the VIX of the Russell 2000, that's also picked up quite substantially. What I've done here is it's the spread between the VIX and the VHSI, which is the VIX for the Hang Seng Index. On a weekly basis, you take the spread. If it's green, the VIX is outpacing what you're seeing in Hong Kong. 4 straight weeks that we've seen implied vol pick up quicker than what we're seeing here in Hong Kong. Is it a sign of hedging to come ahead, of course, of Nvidia earnings? Is that also something else? On the earnings front, I'll end with this very, very quickly. On an earnings story, it's still very clear. It's still the U.S., right? Year to date, revisions are up 11%. Revisions in China are up about 5.5%. So let's call it double. So on an earnings story, earnings revision story, it's clearly the U.S., but also just to normalize this as well, the S&P, I think the strap's going to come up on your screens very shortly on this. The S&P is trading at 22.5 times last I checked. In China, we're trading at about 12.5 times. So we're also about half of what you're paying as far as dollar per earnings in the U.S. market. So does that equalize things somewhat, given the fact that you are looking at double the pace of revisions in the U.S.? Do we have that? Oh, we don't. Okay, anyway, you can just trust my word for it.
Yeah, a great sort of highlighting of really the differences between the two markets, right? At a time when there is de-risking across the board. Let's get to our senior Asia equities reporter, Abhishek Vishnu. He joins us from Singapore. Abhishek, how are you looking at another sell-off today? I mean, is this sort of a signs of just profit taking, or do you think really there's a deeper correction that's underway now?
Well, there is a correction underway, but it doesn't look like that it will become worrisome. There is some risk of that's happening across assets, and we are seeing that it can be a positioning ahead of Nvidia's earnings, ahead of the U.S. jobs report, which will determine where the Fed is heading. But all in all, I mean, if you see, what strategies and investors have been doing, the outlooks that have been trickling in, the setup pretty much looks the same that we have seen, in 2024, where, U.S. actually would outperform, U.S. would deliver better returns, better setup. There are concerns around AI valuations, but look, valuations are never a catalyst for meaningful drawdown. Yeah, they begin the drawdown, but you need a catalyst for this thing to break and become a bear market and so on and so forth. They are expensive, but they're expensive for a reason. They're all delivering a lot of profit. They are all delivering a lot of cash flows, which in turn is feeding into capex. So there is a lot of confidence as we go into the year end. If you look at the return side as well of the equation, I mean, yes, China is cheap, and it has done pretty well for itself. But again, the expectations are, at consensus level, US is going to deliver better returns next year or even into the year end, and China still would do well, but there would be single-digit returns. So net, it still looks like a very positive setup for the world's major stock markets.
Yeah, hopefully that's the case, right? So I think one of the things that people are debating right now within the Chinese market is, has it gone beyond, or has it clearly gone beyond tactical? Because you are getting some people already saying this is a longer-term bull market. Some haven't been convinced just yet. Abhishek, so, I mean, we talked to Lian Ting, of course, your colleague earlier on, and she said, what's in fashion now is not a complete de-risking of portfolios. We're not seeing a rush into cash. It's a rotation into income, things like healthcare, utilities, some of the financials. Will that remain the case? Agnostic of how good, if Nvidia does report something fantastic, agnostic of what Nvidia says and does?
So I'll take a step back into it. What you're seeing in China market is not different from what we have seen in global markets. Healthcare and utilities, or energy in total has been doing well. And, these were the sectors which were ignored. So actually it is a move towards value in a lot of regions. But yeah, I mean, Nvidia, if earnings come at the high end of the estimates, there is if there is increased confidence about its new chip, then, that catapults people again towards the 5-6 handful of stocks which have been driving this rally. But it's good to see, this move happening towards value. It just broadens the rally, for a bit. This is not to say that, the other companies, the handful of companies which have been contributing a lot, have got something weak going for themselves. There is a little bit of profit taking, like you said by yourself. China has graduated from being a tactical market to a new bull market, a new China market, which is largely looking at AI, not looking at its problems like deflation, property meltdown. So, in that context, there are a lot of gains that have been made. And, it's natural for a marathon runner as well to take a break, a breather in between. That's what we are witnessing right now. They'll keep running. There would be gains coming in, but probably not at the similar pace.
Abhishek, fantastic. We'll see you in Singapore, sir, very soon. Abhishek Bishnoi there, Senior Asia Equities Reporter in Lion City for us. Just ahead here on shows, latest on the tensions between China and Japan with reports that you have some diplomats will be meeting today in Beijing to maybe take things down a notch or two. An update is just ahead. This is the China Show. Good morning.
Regardless of which party or individual governs Japan, it must adhere to and honor the Japanese government's commitment on the Taiwan question. We urge Japan to act responsibly toward history and bilateral relations, stop crossing lines and playing with fire, retract its erroneous words and actions, and genuinely implement its commitments to China through concrete actions.
Well, the Chinese Foreign Ministry, they're repeating a demand for Japanese Prime Minister Sanae Takaichi to retract comments about Taiwan that did trigger that full-scale diplomatic dispute. Now, Japanese media reports are saying that senior diplomats from China and Japan plan to meet in Beijing later on today in a possible move towards de-escalation. Let's look closer at the developments with our team. In Tokyo, we have our economics and government reporter Yoshiaki Nohara. Our China correspondent Min Lo is in Hong Kong. Yoshi, I'll start with you. It seems like a lot is expected out of this meeting here today. What are sort of the options Japan has to really kind of cool down tensions?
So, I would imagine that the focus on the Japan's from the Japan side is just to try to, give a little bit more space to, sit down and talk, to start de-escalation. Because up to this point, you're pretty much seeing what started on the security front clearly feeding into the economic front via the channels like tourism. So that's the area that Japan is most concerned about, and they really want to see the tensions start peaking out at this point.
So, Yoshi, we heard earlier, I think in the last hour, very, very senior level Japanese official who said, let's not take the comments out of context. This is not a change in country policy. How do we square the two things? The comments that came through, plus the sort of pulling back from the edge that we've seen very, very recently. And how do we need to be thinking about geopolitical risk right now?
Right. So, David, that's a really tough, tough thing to achieve. It's easier to say that, but if you have to remember that it's a really touchy subject, and I think the Prime Minister is learning a lesson here that she probably should have avoided getting into specifics of scenarios, given that what happened after her comments. So from now on, I would imagine that the lower-ranking officials, behind the scene, trying to see, hey, this is much part of the much bigger context here, and look at the things that two nations have in common in a larger context, especially on the economic front. Both nations have a lot to lose if they start fighting on the economic front. So that would be the key balancing act, how to widen the scope of the conversation to put everything into context.
And Min, it seems like there is really no let-up right now when it comes to commentaries on Chinese state media. Why is Beijing responding so strongly to this?
Yeah, it's because China really sees this as a strategic shift in Japan's stance away from strategic ambiguity, right? And you can see this People's Daily commentary here highlighting a dangerous direction in Takaichi's domestic and foreign policies, and that militarism has often used, Japan's militarism has always used existential crisis as a pretext for external aggression. And remember that Takaichi is early on in her term as prime minister, so China really wants to set the tone right at the beginning of a term and fire this warning shot, not just to Japan, but any other countries looking at this unfolding and thinking about whether they might want to shift their stance on Taiwan as well. We know that China has called on Takaichi to change or retract her comments, which she hasn't done, so we'll have to see how that diplomatic meeting today pans out. But you flip the board, you take a look at what Global Times is saying as well, and it's hitting back at this contraction in Japan's GDP, right, and saying that if Japan continues down this erroneous path, they could see more factors, including geopolitical tensions, weighing down on Japan's economy. And we already got that warning from a social media post linked to state media over the weekend, saying China could cut economic, diplomatic, and military ties with Taiwan. And elsewhere, we are also seeing some posts from Global Times as well. If we flip the board, Could we flip the board, please? So Global Times also taking this cartoon, really talking about the DPP. This is the leader, the Taiwanese party that is led by Lai Ching-te. You can see the sleeve there with DPP, really showing that it's pouring oil on fire, and it's criticizing Lai Ching-te for endorsing what Takaichi said, and saying that Taiwan is acting as this political megaphone for the improper rhetoric from Beijing, and this comes after Lai Ching-te cautioned China, calling it to be restrained, to act as a responsible major power and not be the troublemaker in this region. And if that sounds familiar, it's the sort of rhetoric we often hear from Beijing as well. And we are also seeing state media reporting that Chinese film distributors are delaying the screening of some Japanese films, citing a decline in box office numbers and cooling audience sentiment. So this Demon Slayer had opened in China on Friday with strong box office numbers, but analysts are saying that they could see a decline in the box office numbers in the coming days.
Okay, the other thing that, and we already saw quite a stark reaction in markets on this specific theme yesterday, the travel advisory from Beijing, advising effectively to travel against travel to Japan. Have we seen any cancellations or any signs that large groups of tourists are canceling their trips to Japan?
Yeah, so preliminarily, based on what we have been hearing from sources from some of China's biggest travel platforms, we are not seeing any cancellations yet. But still, we're early on, right, in this cycle, and it's possible that maybe people have some sunk costs into their trips. Maybe in the future, they might be, we might see a decline in travel demand. But on social media, we are seeing pretty nationalistic comments, especially on Weibo, where we tend to see older audiences. And here you can see someone saying, "I'm never going to Japan in this lifetime, even if it's a free trip." And some others are saying that, the Japanese don't seem to be repenting, and we should really plant our flags and put our troops on the Senkaku Islands, the disputed islands, to teach them a lesson. The issue of national sovereignty is not negotiable. But elsewhere, if you look at Xiaohongshu, where we tend to see younger audiences, they are the ones that are saying, life is life, politics is politics. I'm still going to go on my trips because you can't really get refunds for some of the attraction tickets. So it doesn't really matter, as long as they're clear-headed about where they are. And there's a funny comment saying that actually only 10% of people have passports in China, and yet they can't go to 90% of countries. So perhaps from a disgruntled person on social media.
Yeah.
That seems like another issue.
We'll check the numbers on that one. Yeah. We'll see. But yeah, it's good to get the kind of what we're seeing on social media there and what the reaction has been so far. I want to bring in Karishma Vashwani, our Bloomberg opinion columnist. Karishma, you've been talking about how these comments from Takaichi on China has really resurrected this sort of wolf warrior diplomacy. You're saying that this might be a mistake. Why is that?
Yeah, well, Yvonne, picking up on what both Min and our Japan economics reporter was saying, super interesting how China has reacted to this. And actually, this kind of strident rhetoric is something we haven't seen for a while from China. This is the kind of diplomacy that's called wolf warrior diplomacy. We saw it in sort of 2010, 2020, but it was dialed back a bit because the sense was that this kind of rhetoric was very unproductive. It didn't really fit in with President Xi Jinping's goals of trying to put forward a more sort of reliable, stable China on the world stage. But I think when it comes to issues like this, the red lines for China, as Min was saying, this is an extremely sensitive issue for China. And I think this is when you see both the state and social media aspects coming out in this way and being so strident and vocal about this issue.
Well, risking asking the obvious here, Karishma, and you've outlined some of that. If you wanted to upset Beijing, they pretty much tick all the boxes here. Why is Beijing so upset?
Well, you've been talking about it already, David, and the issue of Taiwan is something that China sees as a factor, a part of its national sovereignty. It has not been quiet about that. It is not shy about saying that. And I think the discussions that we're seeing taking place today, or rather that will take place today between Japan and China, will go a long way towards telling us exactly where Beijing and Tokyo will stand in this sort of new era of their relationship between the new Prime Minister Takaichi and how she manages this. Now, I think it's worth saying what Japan has consistently said about this is that the comments did not imply in any way a deviation from Japan's official position on Taiwan. And if you look through the defense papers, it has always talked about how Taiwan is something that worries it in terms of national security. I think that Takaichi was probably unusually blunt in her comments. And, to some extent, she's also playing to a domestic gallery here. And this issue does play quite well at home with a significant proportion of the Japanese public looking at the rising, what they see, assertiveness of China in the neighborhood and thinking about whether that means that Japan does need to increase defense spending. Of course, the pressure from Washington as well. And I think that is, all part of the mix here, but it's played out in this rather dramatic fashion between these two historic rivals.
And what does it tell you about how China operates, Karishma, when countries depended on it for their growth?
Well, I think what it tells you is that when you have a situation where China sees, this is a major issue of national sovereignty, it will not give an edge at all. And we've seen these kinds of things happen before, haven't we, Yvonne? With Australia, for instance, when, the spat between Australia and China went on for something like 3 years. And I think what Japan can take away from this is actually lessons from Canberra. How those negotiations and those talks went over those 3 years with China slamming down in many ways, trade sanctions, travel sanctions, all of it, very similar to what's being threatened today. But I think what Australia did was push back smartly, negotiate very firmly, and that is something that, if I was sitting in the Japanese foreign policy team, that's the kind of advice that I think would be useful for Takaichi and her team.
Karishma, fantastic. Thank you so much. Our Bloomberg opinion columnist, Karishma Vaswani there. The rest of our team just now as well. Yoshihara Nohara out of Japan, and of course Min Lo here in Hong Kong in our studios, giving us both sides there of the story. A very quick look. We're looking at shares of Baidu's not doing anything. There we go. Earnings are coming up. Might give us something to trade on. A preview is just ahead. This is the China Show. Yes.
If we look at what the OEMs
there we go.
saying is, if you place your orders this year now, and if you cannot get it delivered by the end of this year, then they will pretty much subsidize the extra EV purchase tax, which is going to be 5% next year versus 0% this year. So they are trying to, I think, lock in customers.
Yeah, that was Tina Hou who joined us earlier on in shows, of course, to unpack the latest earnings coming through and this massive drawdown we're seeing. The likes of XPeng were down about 8% in that. Geely was also out, by the way, with earnings. We're down about 6% on Leap Motor. Xiaomi is coming out today, of course. Overall, a hardware play, of course, down about 3% on that.
Yeah, when you have overall the smartphone business is not doing too well, given the fact that you are seeing DRAM prices continue to rise, that is going to be something that's going to be hitting their margins, right? You're starting to see that with the likes of Lenovo and the like, which does also report later on this week. XPeng, yeah, that's the big one here. And we'll talk a bit more, of course, about Baidu coming up. A closer look at, of course, China's AI transformation as established tech giants face a challenge from upstarts like Moonshot, like Minimax. We'll discuss more with Kai-Fu Lee, Sinovation Ventures' chairman, joining us here in Hong Kong. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break here, and we're seeing still a bit of downside pressure here when it comes to, of course, the AI proxies there as well. SoftBank, for example, is down some 5% here this morning. So we are seeing the Nikkei 225 down close to 2% here, 52 points down for the topics as well. 155 levels when it comes to dollar yen as well. So we have hit that 155 level here. We are expected to hear from Takaichi. The prime minister is going to be meeting with Ueda, the BOJ governor, later on today. So obviously, we'll see what that means in terms of the rate hike outlook when it comes to the BOJ, but certainly Takaichi dealing with a lot of diplomacy of late, just given this whole spat between Japan and China, which has dragged down some of these travel-related stocks there in Japan as well. But yes, the rest of Asia, how's it looking?
Bad because of Japan.
Yeah.
Really. So the 2% decline we're seeing on the Nikkei is really dragging on the benchmark. As you can see, every single sector is down to varying degrees. We are getting, of course, most of the losses across some of the big IT plays on this sort of downdraft we're seeing across global tech, for example. Russell 2000 had a very bad Monday. The Russell 2000 VIX, we talked about that, really spiking as well. Down to relatively unscathed parts of the market like healthcare and utilities, which does indicate somewhat of a defensive tilt. S&P futures are up, though, so we are looking at some signs of stability going into the session here today. Right. All that is to say, the AI story remains front and center. We have, of course, Nvidia reporting after the close on Wednesday. That's Thursday if you're watching on the Asia Pacific. Baidu is set to report later in the next few hours or so. Third quarter results. Investors will be focused on the strength of its AI cloud revenue growth. Our senior analyst, Robert Lee, is here with us with a preview on what's been driving the stock. It's been a pretty wild ride. You've been the voice of realism.
in my own view. I think we're going to see more of the same because, obviously, as you alluded to, the stock has rallied substantially early this year and has since come off to again, a substantial degree. That's been more driven by the liquidity rally, the sentiment rally that we've seen in the China market. I don't think it's been based on fundamentals or underpinned by firm fundamentals, because the reality is for Baidu, it's a search engine business, and its core business, which is advertising driven and advertising based, has been under massive pressure for the best part of 3 years now, as advertisers spend their advertising dollars on the high growth platforms, the platforms that are getting more Gen Z uptake, the likes of Douyin and the likes of Bilibili. So as a result, their core advertising business has been under substantial pressure. And based on consensus numbers, net income for the company is going to halve in the current quarter. So this, I think clearly spells the immense pressure the business is under at a time when its AI monetization, although it is increasing off a low base, is nowhere near big enough to move the needle.
So what are you looking for in this set of results for Q3?
I think that in terms of the headlines, I think the AI cloud should continue to build momentum. So I think there are going to be some fairly positive headlines on that. Baidu hasn't fully disclosed its the financial performance of its cloud business, but I think based on our analysis, it's a loss-making business. It's making, in terms of cash, I should say, reflecting the huge, heavy capex investment that's required to support that business. So that's not really having a bottom line impact at the business at a time, again, when their core advertising-based search business is under enormous pressure, unfortunately, for them.
You've probably heard all this debate around whether AI is in a bubble, and I think people tend to look at just simply one basket and think, okay, that's the AI basket. Is that a bubble? But we're looking at very different market dynamics. There's the U.S. cohort. There's this entire supply chain here in the Asia Pacific. I want to get your thoughts on what one of our guests said earlier. In fact, so Joanna Shen joined us, JPMorgan. She said, "Bubble or not, it hasn't burst, so it doesn't matter." Let's play it out, guys, if we can.
The key thing here is not whether there's a bubble, but it's a matter of when or if the bubble will burst. If I use the analogy of a beer, so the foam on the top is often the most delicious bits, but it's not going to last forever. I think there's a lot of observers sort of drawing the comparison between this AI build-out vis-a-vis the dot-com bubble era, but I will say there are a few key distinctions.
Yeah, so Robert, for you, two things. One is, do you agree with that view? And do you think foam is the best part of the beer?
I don't think so.
Well, then people often complain they go into a bar having too much foam. And particularly something like a Guinness and having, Irish heritage, that thing should be left to settle. So I'm not sure, with respect to your guest, that's the best analogy. But I think if you look at in very broad terms, who's making money in crude terms in the AI sector? It's the infrastructure plays. It's the Nvidias. It's the cloud computing companies. All that investment spend, and it's substantial as it is going on the infrastructure, yet the software companies, the users of that infrastructure, are not really monetizing. And where they are monetizing, looking at OpenAI as an example, I think it's well known that OpenAI's revenue will be around $12 billion this year, driven by ChatGPT. But again, based on our analysis, OpenAI is going to lose somewhere between 45 or 50 billion US dollars this year. And also, not getting into the weeds and accounting, that isn't reflecting what they may or may not have capitalized on their balance sheet. So that isn't the cash number may well be even bigger than that. So this is a hugely expensive technology to develop. It's very R&D intensive, it's very capitally intensive. And I think the rate, we're like 3 years into this now, I think the rate of monetization coming up across the board, both in the US and particularly in China, is nowhere near high enough to justify these enormous levels of capex that are being put in. So simply put, I do believe we are in a bubble. I think it's been pretty clear if people have listened to me over the last, not just year, but last 2 years. There's a lot of very unrealistic expectations on what the AI companies can deliver in terms of monetizing and ultimately delivering a return on investment to investors. And I think ultimately, if we don't see the monetization coming through, then really this could well go down as one of the biggest acts of corporate philanthropy in economic history, because essentially these cloud companies and the infrastructure companies are subsidizing. They're giving this technology, quite literally in China, they're giving it away for free. And they're all doing the same. The level of product differentiation between the AI large language models and software companies is very, very low.
All right, Robert, I think you have a report coming up, too, about this very topic.
Yes, I do.
Yeah, we'll look out for it.
More on that
Bloomberg
later.
Intelligence Senior Analyst Robert Lee there. Joining us now, of course, is the perfect guest to really talk more about this. Kai-Fu Lee, Chairman of Sinovation Ventures and CEO of 01.ai. Kai-Fu, it's great to have you here in Hong Kong. You heard what Robert said, right? There's still a lot of challenges when it comes to the whole monetization of AI, according to his perspective. In the last 3 years, though, how have you looked at this whole evolution of China AI versus the U.S.? And what are sort of the advantages and challenges for China AI?
Yeah, so firstly, I disagree on the prospects of
US
AI.
Oh, US AI.
Because, you look at OpenAI, it's making $12 billion, spending $40 billion, looks like a bad balance sheet. But most of that $40 billion is spent for future revenues. And if you believe they're 2x, 3x, 5x growth for the next 3 years, it's going to justify that valuation at some point. The bubble is merely that it's gotten ahead of itself, not the likelihood of growth in the future. Okay, not saying it's worth its price, but there's absolute substance under the foam. Now, back to the China AI, the fundamental difference is actually closed source versus open source. The US model is necessarily propelled by this ambition and dream of one company reaching AGI first and squashing everyone, winner take all worth trillions of dollars. That's what OpenAI, Anthropic, Google, and others are betting on. And it's like a genius kid who thinks he or she will win the Nobel Prize. The China approach is, hey, let's all work together and share, we compete, but let's open source our models. So A learns from B, B learns from C. It's more like a study group of smart kids, maybe not genius kids.
But is the open source a reason why a lot of these Chinese AI startups cannot monetize?
Well, I think there's a common belief in US and China. AI is the most important technological revolution ever. There is a belief that this monetization will happen. It's happening first in the US, and it will happen later in China. So there is a bet that if all of China kind of pseudo collaborates through open source, then builds a great platform, then everyone can benefit because the knowledge of the platform. Or if one company comes out ahead, there's a chance to leap ahead and be the next great company as well. So there's tremendous optimism that AI is changing the world, and these models, closed source approach is a belief one company will squash everyone else. Open source is, hey, let's share for now and we'll see what happens.
Has the open source model in some ways discouraged competition? Because I simply have to look across the classroom and see who has the best answer and simply build on that classmate.
Well, that is the business of my company, 01.ai. We've pivoted ourselves to build on open source. Whoever has the best model will use it. If it's DeepSeek or Qwen, we are agnostic. So we're in a position not so dissimilar from Nvidia. Obviously, Nvidia is much better, but they don't care who wins, and we don't care either. We only care that open source moves forward, and its benefits are that open source is free. It's much lower cost when it's basically free, and we can build on it. It's ours. We take it. We do whatever we want. We never have to pay DeepSeek or Alibaba, and also enterprises. They can take the model in-house, run everything in-house. If they have secret data they don't want to send to the cloud, well, they don't have to.
Right, but someone needs to pay for the innovation, though. Who this? Like, I'll just take the OpenAI example, but there's clearly a difference in the Chinese context, where you have capex of $1 trillion, and people are trying to figure out how are they going to pay for that, and then people, to your point, longer term will then have to worry about how they then make that back. In China's case, where you don't have to pay for it, where it's open source, how is the innovation getting funded, and how do you justify to those asset allocators that they will get a return for their investment?
Well, I actually like the Chinese model better. While the likes of Alibaba, ByteDance, Baidu, they're paying a lot of money. They're willing to subsidize because it's fundamental to their core business, whether it's e-commerce or search or social. And I think they're smart business people. They'll do the balancing. They're not spending a tiny fraction for the OpenAI spending. Right. Now, the OpenAI spending is a big bet, big return. It's betting that it will win. Whereas I think Alibaba, Baidu, Tencent, ByteDance, if they're spending more prudently, which they are, they will be able to look at the whole balance sheet and deliver a reasonable result. We don't see any of these people reporting huge losses. Right. So I think the Chinese model is more prudent for a financial investor. The U.S. is a winner take all. So you pick your winner. If you win big. If you lose big.
How do you see it, though, play out in China, whether you have the big AI giants like Alibaba, like ByteDance, who have the deep pockets to continue on with this sort of AI war in China? How do they stack up against some of these startups like a Minimax or a Moonshot?
Well, I admire the courage of the smaller companies who choose to compete. I feel that it's more prudent for a smaller company to build either applications or either enterprise or consumer, and betting on the fundamental foundation models of the big companies, because I don't think it's very likely that any startup can raise money the way OpenAI does, or even 1/10 of OpenAI. And with that, with less money, it is going to be difficult. The talents are obviously very good in the Chinese startups as well as the large companies, but the lack of spend and the lack of huge number of talent and talent density makes it an uphill struggle for the startups that try to do that.
The DeepSeek moment well, let's call it two moments, right? Because the January moment this year was where it became public to the world. Although it was this time last year where people had started to already talk about DeepSeek. And people are now looking for what's the next one. You're connected and well connected into the industry. What innovations are taking place right now? What should we be prepared for going into next year?
Well, I think in terms of deep fundamental foundation models, U.S. is ahead, but China is very rapidly figuring out the great things U.S. is doing, plus a few of its own good things, to basically trail by 3 to 6 months. I've been saying this for a year and a half, and it still remains the case. So I don't think there's going to be a huge breakout, change the world technology in China. That's not likely. What is more likely is there may be great consumer apps. And what's even much, much more likely is that Chinese hardware. There's a company called Plod. It is basically an ambient AI that listens all the time and gives you summaries of all the meetings and tells you what to do and gives you reminders. And that's just the beginning.
Right.
That is so much cheaper to build in China. And it's iterated much faster and it's getting smaller. And I think the Chinese VCs are hesitant to invest in large language models for the reasons we discussed. But they are going all out, including my own Sinovation Ventures, on betting on hardware. When people talk hardware, people think, oh, it's embodied robotics and it's humanoid robots. But those are also a bit overpriced. It's much more prudent to invest in small devices because when AI revolution moves forward at the next step, we will see that the best device on which to use AI is not the phone. Whether it is a glasses or watch or wristband or a little necklace or almost invisible are all possible because AI first means it's always on, always listening, always thinking, and it's your external hard drive that's smart and remembers everything you see and did. I know you're going to talk about privacy, but
I know.
That's a separate discussion.
It gets a bit creepy.
I might be listening to you right now.
Oh, my goodness. There's a lot of this hot trend about AI agents. Can you tell us a bit more, what's all the buzz around it, and how long before it becomes pretty mainstream, you think, when it comes to enterprise?
It's real already, but it's not yet mainstream.
Okay.
An agent is built on a large language model. The large language model is the brain, and there may be multiple large language models, each doing special things. But the two most important things wraps around it. One is memory. It knows who you are, what you did, who's your company, what your policies are. So it's relevant to what you do, as opposed to a general chatbot. But the other even bigger thing is that it executes tasks. So instead of giving you a travel itinerary, it gets the travel booked, your airline, your hotel. Instead of suggesting what's the strategy, it starts executing. Your ads are placed as opposed to suggesting what ads you might do.
Or even anchor shows, right, Dave? These AI agents.
If not already, our viewers actually might not know.
Oh, you're AI?
No. yes. We're actually not here.
Oh,
figment of your imagination.
Always great to have this talk with you. Thank you. Fascinating stuff. AI. Of course, Kai-Fu Lee there.
What is real?
Sinovation Ventures Chairman and 01.ai CEO. All right, we're going to talk about something else now.
Yes.
Something a little bit more.
I can't believe the song is 10 years old.
Have you seen the kid? The kid is actually grown up now.
Is he?
Baby Shark we're talking about, yes.
Massive IPO today. Massive debut. Stock is surging. It's been 10 years.
Yeah, he's like a teenager now.
Just to manage your expectations, he's not coming on next, but we'll talk about this shortly. This is the China Show.
Daddy Shark, Daddy Shark, Daddy Shark, Daddy Shark.
Baby Shark, Baby Shark, Baby Shark, Baby Shark.
Oh, we had to flood that into your earwaves there. Oh.
I'm sick
that?
of it.
You know what? It's gone a second cycle for me at home, so it's coming back to me in a big way. The studio behind, of course, YouTube's most watched video ever. We're talking 16 billion views. Yeah, that's Pink Fong, which has made its trading debut in Seoul today. And what a debut, Dave.
Yeah, forget about SK Hynix. Samsung Electronics. Sammy Cha is here with us, our Asia Equities reporter. So clearly the first day went well. How did the IPO process go for a company that obviously is very well known for one single thing? Is it one single thing? Oh, anyway,
no, they got several.
They got several. Okay.
Yeah.
So I guess we can get to the what's next, but what was the process like here?
Yeah, so the IPO itself wasn't that big, right? It was about $53 million, but it was priced at a top of the marketed range. And what was really intriguing was there was 600 times over subscription. So everybody, just like the content itself, everybody just like piled in to get a share of this listing. And there were, of course, some rumors that they're going for acquisition and whatnot, but it didn't really matter because everybody just wanted that. And it's risen 60%, as you said, at the open. It's come down a little bit, but still it's gaining, and it looks very successful. And a lot of that looks back to the previous IPO of its peer, SAMG Entertainment.
Yeah.
And it did really well since its IPO. The stock has tripled, and so there's that whole wave of this content that is, again, becoming like another boom for the K-wave in Korea.
That's right.
And yeah.
Well, everyone talks about Baby Shark. That's certainly the one that we can't get out of our heads. But what about the other existing IPs, right? I mean, people are talking about, can they really replicate the same amount of success in other sort of IPs that they have?
Yeah, so that's one of the reasons why some of the investors who we talked to were actually not really. They were reluctant to participate in this IPO because they were not sure about any other IPs beyond Baby Shark that we have been listening to a lot. And but the CEO says the Bebefin, it's another character, another franchise, has overtaken.
Who is it?
Bebefin.
Yeah, and Yvonne knows that.
Yes.
Yeah,
they're
it's
like the Coco Melon sort of counterpart, I would say.
Who then is Coco Melon? Sorry, we could be here forever, but
This is past your generation.
Right. But Bebefin has
bedtime.
definitely overtaken in terms, it's a revenue of its content revenue from Baby Shark. So there is definitely hopes that the company can do well. And a lot of the investors are actually saying that at its IPO price, it's quite undervalued. It's trading at about 25 times earnings, forward earnings, whereas its peers are at about 40 times. But I think this is something, it's an inherent problem that all these content creators and these kids creators are actually facing. We're seeing the same moves in Sanrio and Pop Mart as well.
That's it. Yeah, I think, and you're looking at a similar dynamic between the companies.
Cute. He banged the drum, Pink Fong.
Yeah,
and Baby Shark's right there next to him.
With his little fingers and a lack of a thumb. Okay, Sammy Cha, thank you so much. Fantastic report there and fantastic debut today. Plenty more ahead. This is Bloomberg.
Go, Dave. We got a flight to catch. We got to go to Singapore.
Yes. Okay.
All right, New Economy Forum happens Wednesday to Friday. We're taking the China show on the ground there at Singapore, right? A long line of guests to tell you about there. We can't go through them all with the lack of time that we have.
Yeah, everything from what's going to go on stage to outside on our set. To stay tuned for a lot of good coverage from the NEF starting tomorrow all through Friday. We're taking the show on the road. We'll see you from there tomorrow. This is the China Show.